Good afternoon, traders. Today is Monday, November 7th, and the markets are now closed. They've been closed now for about an hour, and it was a good day. Dow Jones up over 400 points, and we had a bull market today. What you have on your screen here is the MACD, the 1 hour MACD, clearly going up, and so did the markets. That was the call I made in this morning's Outlook. I saw that the 1 hour MACD clearly going up, and it was a great day. So let's jump right on into it. Today's action. Okay, actually today was dominated by the 65-minute time frame. Okay, the what? Let me zoom on in to the 5 minute first. This red line comes from the 65-minute EMA 50. This gray line comes from the 65-minute SMA 20. So there it is right there. EMA 50, SMA 20. Okay, this time frame dominated the entire day, pretty much, and it stayed within um, the chop box, I guess you want to call that. Okay, so as you can see at opening bell, it went right up to it and kissed it, and came down and kissed the 65 SMA 20. Okay, that's where it peaked and that's where it troughed for today. And then after that, it was all just chop. Okay, now um, before I explain more, here I drew this out for you guys to see. This was Friday. This arrow, that's Friday. This is extended hours, pre-market. So what happened was Friday it surged at the end of the day. We all know that. And then it had a very shallow, to me, that's very shallow back test. Okay. That tells you there's a lot of strength. That was part of the reason why I called it bullish this morning. That's a very shallow back test. I expected it to more do this, but it went more like that. And then it surged up after the shallow back test and kissed the EMA 50 on the 65-minute chart, right? And that's where it found resistance. So basically, this is like as of 6 a.m. or something like that when I looked. When it found resistance from 6 a.m. all the way to, we'll just call it noon, afternoon. It was like 11:30-ish. It backtested. That's what it was doing. From that peak all the way until noon-ish today, it was just backtesting. Kissing it, and then going down and kissing this one, kissing the SMA 20, right? So it kissed the EMA 50, EMA 50, SMA 20, SMA 20, SMA 20. That was the pattern for today. Okay? So 65-minute dominated today, clearly, right? Once it finally, basically, it back tested for all these hours until noon. It was consolidating so it can build the energy to surge. And that's exactly what we got, right? Okay, so it should come as no surprise. Now, how, what were the clues that it wasn't going to fall today? Let's look at the MACD on the 65-minute, or the basically essentially the 1 hour. When I came in this morning and looked and saw that coming up, it was already in the positive. It was in the positive as of opening bell. It flattened out only because it did flatten out because it's back testing, right? But it stayed positive. Just stayed. It never curled down negative. That's how you know it's just a dip or a back test and not a fall. Okay, let's skip over here. Here's the 30-minute. Same thing. It was falling down and falling down and falling down because it was back testing, but it never even really came close to the zero line, which is right here. See that? It just stayed above it. That's always a good sign. Always. That's how you know that it's not going to fall on you. Okay. So basically, the 1 hour already showed significant strength here. Significant strength and more flattening out. And you kind of expect that because it's already went up, down, up. So it's got to, it shouldn't be a surprise that it's at least flattening out. Just so long as it doesn't curl down into the negative or curl down below the signal line. Okay, but the key was this red line stayed above zero. See, you can see those bars underneath there. It was above zero. That means it is not going to fall, right? And fall it did not, right? It just kind of back tested, boom, took off, right? It just took the whole day to do it. That's what I didn't know how long it was going to take. This morning when I called it bullish, I'm like, well, it is going to, I said in that morning session, it is going to come up and try to break through this, you know, the EMA 50. And it did at opening bell. It kissed it, but then it went down. And it back tested the whole day. But finally, at the end of the day, boom, kaboom. Okay. All right. Let's see. What else? We talked about that. Um, you know, here is back. This is the 5 minute. Back to the 5 minute. So, you know, it did a classic ping pong with the 5 minute again. So this is it bounced off the 65 SMA, right? So basically, it was failing, right? It was failing to clear the whole day because it was back testing. It was just back testing, consolidating, getting energy. So that's why you see these candles, these red candles go right through the EMA 50 line, right? That's classic. Oh, it's failure, failure, failure. Only because it's building energy, but it wouldn't give up the 65-minute SMA 20. Okay, so um, so you could probably conclude here that I don't really look at resistance lines so much, support and resistance lines. I mean, I do to the extent that like these black lines here, but I drew these out 2 months ago. See what I mean? Um, oh, and that's another good point. So I drew this black line right here out 2 months ago, right? But yet on Friday, it came right on there and kissed it, right? It wouldn't go below it. Remember that Friday session, in the afternoon, it would refuse to fall below the support line that I drew 2 months ago, and so it just took off from there on Friday. Okay, uh, so back to what I was saying, I don't really put a lot of emphasis on support resistance lines as I do the EMA and SMA across different time frames, right? So as you can see here, boy, the action is always somewhere in these lines in the EMA or SMA, and then in the 5 minutes, it's ping ponging through its own EMA 50 line on the 5 minute chart here. See that? But as you can see here, basically that the EMA SMA on the 65-minute is your resistance, is your support, right? That's what it was. That was your there's your support and resistance lines for today. Tomorrow is a different story. I don't know what it's gonna bring tomorrow. So I guess the key is throughout the day, try to figure out which time frame is dominant. I guess that's the key to really trying to predict where the market's going to go. Figure out figure out which time frame is the dominant one. Today was 65. Tomorrow it might be the 30. I don't know. Or if we get a huge surge, it might be the 130 minute, right? 65 times 2, 130 minute, or it might be the 195 minute. I don't know until the pattern real time reveals itself. Okay? So um, so back to this, this is classic. Bounced off the 65-minute SMA 20 up to the 5-minute EMA 50, right? Failed. retest, shallow, very shallow retest. By the way, this shallow retest right here is that right there. This is the 1 minute. That's the 1 minute. So, um, but then here we go. This was the first move. This was the first attempt all days. This is the afternoon by this time. This was the first successful attempt breakout, successful backtest. All previous attempts here, here, failed. This was the first one that was positive. But how long did this backtest take to be successful? 5, 10, 15, 20, 25, 30, 35 minutes. Okay? So it would have been ideal to wait 35 minutes to finally get calls here, right? Because then you have confirmation. But you can already get a pretty good idea things are looking on the up and up because look at these long wicks. Look at the wick. Look at the wick. Look at the wick. It's like, buyers are pushing it up. It's not going to just collapse like something like this. Look at this big red candle with no wick, right? That's usually like, ooh, telltale sign something the buyers aren't stepping in. Okay, so um, so that is that. Now this is the MACD on the 5 minute chart. Look at the divergence here. So it kissed this line. It double bottomed today. It kissed the 65 SMA 20 once, actually twice, 3 times, right? 3 times. But look at that. 1, 2, 3. That's bullish. Bullish divergence. And what happened? Look straight up. Boop, 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 boop. Takeoff time. See? So, some things to look for. All in all, a good day. And look at the RSI down here on the 30-minute chart. That's bullish. Higher lows. 65-minute. Oh yeah, that's really bullish. That's a steep angle. So, okay, so just telltale signs. It's like, oh yeah, it's getting ready to pop anytime. All right. So I want to jump over to the NASDAQ futures, 1 hour chart to give you an idea what we can expect. You know, so clearly, as you see here, this is the 1 hour chart. Clearly, it's firmly in the positive. The MACD red line here is clearly in the positive, separated from the signal line and way above the zero line here. Okay, that's clearly bullish. Um, Barring any crazy catastrophic news happening overnight, this is something you can hold overnight if you're, you know, tomorrow is going to be bullish as well. This is very, very strong. I mean, look at this. It's well past and above the zero line. Okay, that's the 1 hour chart. Now, I will say though, the 4 hour chart improving, right? You see the the MACD line separating from the signal line. Good, good, good. However, still below the zero line. That, on something like this, you just need to see follow through. So, so because the 4 hour is not above the zero line, see what happens once it does cross the zero line. I mean, you're in for multiple days of gains, positive, of bull run. But until this crosses over the zero line, you cannot say unequivocally, oh, this is going to last all week. So the 1 hour is clearly over the zero line. And you can at least say it's pretty safe tomorrow is going to be up as well. But that's about as far as you can say since the 1 hour, you only have the 1 hour as confirmation that it is firmly over the zero line, but the 4 hour is not there yet. If you go even further out, than the 4 hour. And let's go to the 1 day, right? See that? Neutral. So even slightly downish, barely down. See? So the daily MACD doesn't confirm or deny bull or bear. It's just neutral. So uh so right now I can only say that I think tomorrow is going to be bullish. That coincides not well with the midterm elections, and quite frankly, I think the markets are hoping that the Republicans probably take over at least half Congress, whether that be the House or the Senate, right? They don't want a clean sweep. The markets like gridlock because then they know no sweeping legislation is going to happen, right? That's what they're hoping for. They like gridlock. Okay, so um, let's just keep our eye on tomorrow. But I think it's going to be another up day, barring anything catastrophic happening. We'll just see when futures open back up, um, and go from there. I'll be watching it tonight and tomorrow morning, like always. Now, I want to review with you guys. This is Apple, and I got a question from one of the viewers to just review Apple and Google. But I think once I review Apple, it's the same consideration for Google because I saw the same pattern. So the question is, should should you wait until what what quite possibly may be the flash crash in March of 2023, or should you get in now? And I will answer it this way. On the left-hand side is the weekly chart for Apple. Okay. On the right-hand side is the daily chart of Apple. And I will say this. So even today, Apple didn't really participate too much. What was it, up 0.39%, I think? That's kind of ho-hum. Look at the weekly chart right here. Look at the red line. It's clearly tilting down, right? And look that it's firmly below zero, right? There's your zero line, and the weekly is going down. Look at the daily. Below zero, and it too is going down. Now, think of it like this. I mean, all in all, I'll state my conclusion, and then I'll back it up with supporting details. My conclusion is Apple is going lower. Even within the next 2 weeks or so, Apple is going lower. And how do I know that? When the weekly chart is, first of all, tilting down, that automatically tells you it's got more downside. But even if it was more flattish, okay, let's just say it's flattened out right here. The fact that it is below zero, okay, that's the key. On the weekly chart, the fact that it is below zero, and in this case, heading even lower, means that anytime the daily goes below zero, which it is right now, and it's been that way since, let's have a look here. 1, 2, 3, 4. 4. 4 trading days, it's been below zero. Notice the significance of the fall, of the drop here, starting from here. It obviously opened right up here, and here we are down here. Up here, down here. Notice the difference, and that's just this short line between here to here, right? Just right, between here to here. It's just a short line compared to this long line, right? Going up. But notice the distance of the drop between here all the way down here compared to the distance of the rise between up here and here. What I'm saying is the drop is significantly more powerful than the rise, the, the depth of the drop. And that is because anytime the weekly is below zero and trending down, which is the case for Apple, and you start to get the daily into the negative, that always means lower lows. Okay? So, yeah, it means lower lows, right? So that's why I say Apple Apple is going lower. So basically, here, let's see. Let me, if I can, let me move this. There we go. Here we go. The distance from here to here, right? Well, so right here all the way up to here is greater than 2 times the distance from here to here. Would you agree with that? Right? I'd say it's almost triple. It's almost triple. But yet the time it took to get to the zero line and into the negative, look at that. Look at that distance is greater than half of that whole distance. You see what I'm saying? So when you're negative on the weekly and trending down, and then the daily starts trending below zero, look for lower lows. And when you zoom all the way out like this, we have, quite honestly, well, yeah, this was the June through August rally. I don't know if we're going to have something like that again for the rest of 2022. That remains to be seen. We might. But, it's I, I can't see us I can't see a situation where it's where we're not going to go lower. Just because of, I mean, look at this: lower lows, lower lows, lower lows, lower lows. Well, then here's finally a higher low, and who knows where this is going to stop at. You see what I mean? So while it keeps trending down, Apple has no choice but to go down too. So yeah, so I can revisit this in a couple weeks, but I think in the next couple weeks Apple will continue to go lower, most likely. So I mean, clearly, even on the daily MACD, that's not bullish, right? You can't say that's bullish. And so let's just keep an eye on it for the next couple weeks. And my thesis is it's in the next couple of weeks, it's going to likely break uh lose support of the June low. But we'll see. Um, you know, it's going to have to, for me to change my thesis. It's going to have to. This is the 4 hour. Locked up on me a little bit there. Okay. Well, see now the 4 hour. Wow. Ooh, this is getting sticky. Let's get dicey here. Let's see. Okay, so so the 4 hour is starting to curl up. Yeah, that's good. Yeah, that's good. However, that here, here we go. Yeah, that's good. This, yeah, that's lower. That's what I thought visually. This is lower than this. Usually when you have that situation, wow, look at that. Look at how far down it is. Whew. When you have that situation, you don't have bullish divergence. You see what I mean? Bullish divergence mean I'm expecting that to be a higher low. So we still have a lower low, which tells me, Apple has further down to go until I start to see bullish divergence of something like, we'll just pretend it's like that. Yeah. Then I think it will have found a bottom. Let's just pretend that it stopped there and starts to curl up. Right? Then we have found a bottom. That was similar to the 5-minute chart. Let's just jump right back over that real fast. Right here. Like something like this. Here we go. For example, that's the MACD on the 5-minute chart for TQQQ. That's bullish. And what happened? After it was bullish, look straight up. Boom. It just took off. Took off like a rocket. Okay, so yeah, on the 4-hour chart right here, let me undo that one. That's not bullish. It's got more downside. So, hope that helps. Google. Well, I don't like it. Let's jump over to that real fast. Alphabet. Ooh, that's kind of okay, but at least Google is kind of trying to come up here on the 4-hour. At least they're trying to do that. However, let's have a look here. Well, okay. Okay, see, so, okay, here we go. That's earlier I was talking about bullish. Let's see, oops. Let's draw this out. Google's a different story. That's generally bullish, even though it was doing this. See that? So this is generally bullish. However, ooh, that crossed below. That's that trend line right there. Okay, so let's look over at, oops, the 1 day. Let's skip on over to the 1 week and see what that's got to say. Let's go ahead and clear all. Ooh, no, that doesn't look too good. That's not a good look. See that? That's not a good look. That's the weekly. And then that's the daily. Yeah, see it. Okay. So the daily, it looked like, okay, oh, there's some bullish divergence, but it just broke right on through that trend line. That's not good. The weekly confirms down. So, yeah, I think it's got more downside to go. So I think overall, it's not talking about Google or Apple specifically. Overall, I think this week, tomorrow is going to be up. Wednesday, we'll see. Let's let Tuesday play out before we talk about Wednesday. But I think no matter what happens, I think Thursday the trapdoor opens or the sinkhole opens up because CPI is going to come in hot, and I'll cover that more as it gets closer, maybe Wednesday evening. CPI is going to be hot, and I think the market's going south. I think that's what's going to happen. So I think for now the market makers are just trying to pump it up, pump it up, pump it up, get people in there, only to pull the ripcord on them Thursday morning in pre-markets when CPI is released. Okay, so hope that helps. This is Google and Apple. I think they're both looking weak. When I look at the weekly and then look at the daily, it's firmly below the zero line, and it's just kind of see, it's just dangling there. It's not like trying to, well, I can't say that. The 4-hour did try to curl back up. Yeah, see, it is trying to curl up. If the 4-hour is doing this, then that tells me the 1 hour is going to do it too, even more so. Yeah, see, the 1 hour is firmly above the zero line, and but boy, for it to translate though to the 1 day, see, it's really gotta have multiple days of strength like that. And where's you gonna find it in this environment? You see what I mean? Where are you really gonna find sustainable rally strength in this environment? That's a tough ask right now. So I would say for both Google and Apple, just watch it for the next couple of weeks. I think you're gonna find it's gonna go lower. And that could be as early as this Thursday when CPI comes out. And that's when all the market goes lower, not just Google and Apple. Okay. So, yeah, same idea. When the weekly is way below and is trending down, and you're way below zero, and when the daily starts, this is firmly below zero already, down to -4. Yeah, you got more downside to go. This is not over. So, okay. Hope that helps. Let me know if you have any comments or questions. Leave it in the comments down below. Thanks.